Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for the Precious Metals and Critical Minerals Conference. Our next presentation is from Panthera Resources. Please note you may submit questions for the presenter in the box to the left of the slides, and you can view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Mark Bolton. He's the Chief Executive Officer of Panthera Resources, which trades on the OTCQB venture market under the symbol PATRF and on the LSE under the symbol PAT. Welcome, Mark.
Thank you very much. I look forward to sharing our story with your subscribers. Okay, my name is Mark Bolton, as was just highlighted. I'm giving a new presentation today on the company Panthera, so hopefully it does go smoothly. Panthera is a gold company founded on the back of assets in West Africa and India. Before I go through and detail the assets, I do bring your attention to the disclaimers. We are effectively a blue sky investment, and accordingly, there are significant risks attached to our business strategy. So please do read and take notice of the disclaimers and the other notices. Getting back to the important stuff, essentially the company has two asset pools. We identified and discovered a very significant gold asset in India, the Bhukia gold project. A truly world-class asset that would have produced circa 500,000 plus ounces a year for 20 years. It essentially was a discovery of a major new gold district. In addition to the asset in India, our other major asset pool is in West Africa. I won't cover the West African pool today, largely because the value attributed to Bhukia is so significant. Most investors are primarily focused on the Bhukia project. Unfortunately, due to regulatory issues in India, the Bhukia project has turned into essentially a litigation story. So today I'll primarily be talking to you about essentially a new style investing product or opportunity that most investors would not have come across, and that's investing in a certain type of litigation, which is a claim under a bilateral investment treaty, in this case between Australia and India. And the claim is essentially underpinned by that treaty and a breach of the treaty, as we allege, against the government of India. So as we go through, I'll walk you through what a bilateral investment treaty claim is and why we believe it is a compelling story. One that there are very limited opportunities in the space, and in our opinion, Panthera is probably one of the leading opportunities in that space. It's a significant claim. It's 1.58 billion. It's a moving number based on the gold price. That claim was set some months ago. And obviously the gold price has moved $500 plus an ounce since that claim was lodged. As I've highlighted, it's underpinned by the value of the asset that was expropriated, being the Bhukia project. I'll talk a little bit about the project so you can get a feel for why we're so bullish or optimistic as to the value of that discovery. It's important to understand that this is a fully funded claim by one of the leading litigation funders in the world, LCM, and I'll talk a little bit about them as we go through. Importantly, one of the challenges with arbitrations, international arbitrations for treaty claims, is the timetable. Investors attending the presentation today are fortunate in that we have a lockdown timetable, with a hearing scheduled in December next year, which is an aggressive timetable that the panel has given this case. So that's an outstanding comfort for us. And I'll talk a little bit more about the timetable as we go through. Before that date, there are several catalysts that typically, when you look at peer group companies, have the opportunity to see some share price action along that journey. And as I've already highlighted, it is leveraged to the gold price. It's not locked in based on our claim. That claim value is a proxy or a placeholder, essentially. In terms of West Africa, it's probably dealt with best online through private meetings or subsequent inquiries with me directly. But it's a great portfolio, and we hope to realise significant value from that in time. Okay, so that's the quick overview of the company. I'll just give you some quick background information that's useful to understand the value proposition. As you can see, the share price action has been very positive in terms of support for our claim. And we've seen already a 3-4 times uplift in our share price over the last 12 months. We think this is just the beginning of the opportunity, and I'll walk you through why we see this just at a fraction of the value opportunity as we go forward on this journey. We are listed on both the LSE, the AIM market, and very recently on the OTC. If I remember correctly, we're a PATRF on OTC. Just a note, we've only been on OTC for 10 days. Whilst the bid offer or the offer side of the screen is pretty skinny, it is underpinned ultimately by the stock that's available in London. So don't be scared off by the thin offer side, because typically overnight it'll be filled by the counterparty that brings stock, or your market maker that'll bring stock across over from the AIM market in London. But you can also obviously choose to buy direct from London as well. Okay, in terms of capital structure, we've got about 265 million shares and options and warrants, roughly 250 million shares as of today. That gives us a market cap of circa 60 odd million pounds and about 80 million US dollars. And most of that is underpinned essentially by this arbitration claim. A quick note, you'll note the warrants are the lion's share of the dilutive securities. Those expire. There were 17 odd million of those 12 months ago. They expire in a few weeks, and essentially they will pretty much all be converted by the 10th of December. I'd be surprised if there's any outstanding after the 10th of December. It's a good thing from us because it provides additional working capital for our corporate and administrative costs. As I highlighted earlier, we have LCM in place funding the arbitration legal proceedings already. The incentive options are management incentive securities to drive the company forward, and the remaining warrant options are de minimis. Okay, let's get into the arbitration. Essentially, let me move this. Okay, so in summary, Panthera's subsidiary, Indo Gold, made an investment, an Australian subsidiary made an investment into India. At the time of the investment, there was a bilateral investment treaty between Australia and India. It was in a very standard format. For example, there's almost the identical treaty between Australia and Pakistan. It follows a very typical standard format. There's nothing unusual about the treaty. Over the course of following the investment, India frustrated our progress on the project, and ultimately our rights were essentially taken away from us. We allege that India breached the treaty, and under the treaty, we're entitled to seek compensation for breaches of the treaty. Essentially, we have made a claim we filed our claim in May this year. and for the alleged breach. And at that point in time, our damages expert applied a value of damages of 1.58 billion. It's important to understand that our market cap is only 80 million US. So we were trading at around 5% of the potential award that we have sought. As I've highlighted earlier, the hearing is coming on quickly. And as I'll point out to you, that's really important because there's not only investing in the treaty itself, but I think that the real opportunity is investing in the journey leading up to the date of any award. So I'll talk about and explain some of the precedent cases and the share price action of our peer group companies. LCM is a leading litigation financier, and they've invested in a number of these bilateral investment treaty claims relating to expropriation of mineral assets. As far as I'm aware, they've got a 100% track record on these types of claims. They spent a year doing due diligence before they committed to this facility. Importantly, it's a single point bet on the binary outcome. You as an investor get to trade in and out and in the journey, okay? Which gives you far more flexibility to trade in and out. They're involved until the very end. Important to understand their financing is non-recourse. The only path forward for them in terms of return is proceeds from a successful claim, okay? Moving on to some more detail. Look, the Bhukia project, which is in Rajasthan, is an exceptional project. I've been in this business for almost 35 years. I came to this company 5 years ago on the back of the opportunity around this project. And I've been pleased to have been involved with some outstanding projects for big and small companies. And this is right up there, if not the best project that I have seen in my career. It's an entire gold district. We estimated that the district had the potential for 10 to 20 million ounces. We did 25 odd holes, and we quickly identified 1.7 million ounces out of a single drill campaign. The Indian government subsequently drilled 155 holes, and they reported 7 million ounces with the additional drilling. So as you can see, this is a really significant gold project. Moving on to some more detail around the, come on, this thing moves very slowly. I just wanted to give you some analytics to help you understand the value proposition. So roughly at the moment, we're trading at 23p, okay? That represents a market cap of 70 odd million. At 50%, which is the right-hand side, you can already see that that translates to a share price of north of £2, around 2.25. At 100%, you're looking at circa £5 versus a current 23p. So there is a significant gap between where we are trading now and the opportunity of being the size of the prize, essentially. Now, I'm not suggesting that we will get a fully covered claim. In other words, the panel may choose to award a lesser amount. In fact, that is the more common outcome. I do highlight, though, that we do expect a significant increase in the claim amount as we go forward based on just prevailing gold prices. If gold price continues to increase, we can expect even further increases in our claim value. The nature of the breaches that we allege against India under precedent in international law, the award amount is determined at the date of the award, that future date. So essentially, we are highly leveraged to gold price going forward. And as I've highlighted, there's a significant gap already based on when the claim was submitted and the prevailing gold price. Let's just to drill into some of these technical terms for the uninitiated in terms of bilateral investment treaties. Essentially, they are treaties or agreements, they're contracts between governments to protect each other's citizens that make investments into that foreign jurisdiction. The key clauses from an investment protection point of view are around expropriation and fair and equitable treatment. And the common interpretation of those terms is the correct one. In our case, we are alleging that India breached both of those clauses. Okay, and that forms the basis of our claim for against India. It's a fair value claim. In other words, to put you in the position you would ordinarily have been but for the breach. Okay, and hence the compensation. I think lights have gone off in here, probably because I'm not moving too much. There we go. Okay, under the treaty, there is a dispute resolution process. That's essentially an arbitration process. It's an independent process conducted in a neutral location. In our case, the seat for that arbitration is the laws of England and Wales. Okay, the actual hearing, by coincidence, will be in the Peace Palace in The Hague, but that's just really a venue. The important point here is the laws of England and Wales in accordance with international law. This is not a claim that has been fought in the courts of India. We have been through that process and escalated the matter to a treaty claim. Okay. Now, if you do Google the treaty, you'll note that the treaty has been terminated. However, there's I think it's 10 years sunset clause for us to file our claims. And from memory, I think the treaty was terminated in around 2017, or give or take a year or two. So we have filed the claim well within the sunset clause period. Hence why if you do Google and see the treaty is terminated, we're still protected essentially. Just a little bit more drill down. The treaty is essentially, well, the arbitration is conducted within the UNCITRAL rules, which are essentially the UN. There's two major commercial treaties out there. There's ICSID and UNCITRAL. In this case, we're under the UNCITRAL rules, which is I think about 158 countries are parties to the UNCITRAL treaty. The arbitration is conducted by a panel of three judges, or three arbitrators, I should say. I have to say that we have an exceptionally well qualified panel, and part of the reason why we're seeing this process move so quickly through, quicker than on average, is the strength of this particular panel, particularly led by the chair of the panel, a Spanish arbitration specialist, probably the #1 arbitrator in the world right now. So an outstanding panel. It is a confidential process. We will still make announcements to the market from time to time, highlighting specific deadlines or events that have happened, but the minutiae is something that we don't disclose. We can agree to a settlement with India and suspend the process at any time. There is at no point is it irreversible and a settlement not possible, which is good because in our opinion this is a matter that should be settled by prior to the panel, but it does take two parties to come to the table, and accordingly, there's no guarantee that will happen, and we're marching forward on the basis of the hearing and a potential successful outcome through 2027. The collection of the assets. Now, essentially, if an award is granted against India, we can collect state-owned or sovereign assets that are located internationally. So essentially, foreign reserves, airline assets, other investments or trade that India may hold outside of the country of India. In my experience, this is my fourth arbitration, I might add, by sheer coincidence, I should point out. There are almost no countries that don't ultimately comply. There's guaranteed to be resistance and frustration, but ultimately even India has paid and continues to pay. Only countries like North Korea and Venezuela ultimately have been shown to be recalcitrant. So the chance of collection is high, but slow. Okay. Just to give you a flavor as to this is oil and gas or resources arbitrations on bilateral investment treaties in recent years. As you can see, this is not a novel concept. And in particular, I draw your attention to Cairn versus India, which was paid out about 2 years ago, over $1 billion US. That was an English company against the government of India. So there are plenty of precedents. This process does work. It's a frustrating process, but it does work, and you need good financial backing, and that's what we have with LCM. I won't go through the slide in any detail. It's a useful slide, and I do implore you to read it, and particularly follow the links, because it does give you a flavor of the space in more detail. The most interesting one is this slide here, and essentially what it's pointing out to is at least 50% of cases are, well over 50% of cases are either awarded, in other words, won, or settled. So the probabilities just on a general average are pretty high. Okay. The most useful research that I can point you to is the VSA Capital Research. Please do note that they are our paid corporate advisors. Notwithstanding that, I think this research is outstanding. We had little or no input into the research, and the gentleman, Oliver, has done an outstanding job in explaining this style of an arbitration investment, particularly the sector analysis for the space. I do highly recommend that you read this, the VSA research, and particularly around the analysis around peer groups and precedents, because it does underpin the value opportunity in what we call investing in the journey. Okay. And this is really a summation of VSA's work. Okay, this is not our work. It is it's looking at some precedents, and it is a forecast or an estimate. So obviously it comes with all the disclaimers and cautions that go with that. So what VSA have done here is they've done an analytics on historical arbitration claims around mineral assets. And what they've identified is a pattern of revaluation along that journey. So what we're seeing is that these companies will typically trade at 1 to 5% at the initiation of the arbitration process. As you go through and achieve certain milestones, then the revaluation milestones, they provide a milestone catalyst as you get closer to an award date. And the important aspect here is ultimately what VSA have identified, that at time of potential award date, the historical peer groups companies trade at 30 to 50% of the claim value. And if you go back to the slide, that gives you a flavor of the near-term opportunity, just using the 1.58 billion, not necessarily any upgraded claim on future gold prices. And that really, to me, is fundamental to the investment thesis right now. And that's really what you should focus your attention on. Because between now and the hearing, it's locked in. These milestones are not subject to risk events; they are procedural. Okay, and that's really what I think is compelling. It's investing in the journey provides a lower risk value accretion without a binary outcome at the end. You can choose to hang in for that binary outcome, based on your perceived merits of the case on that date, but the journey itself, it does not consider the merits of the claim before then. In terms of the timeline, I won't go through this in much detail here, but essentially we have these four major milestones between now and the hearing date, which is in December next year. The award date, if we're successful, is not determined. We don't have a date from the panel as yet. So that's really the Panthera story. I will point you to the leadership team. As I said, this is my fourth international arbitration case. Tim was involved in one of these other cases earlier that I mentioned. He was involved in the Pakistan case, the Tethyan copper case, which was, I think, 6.8 billion award. He was the CEO of Tethyan at the time of during the project's development, and was a key witness through that process. In terms of contact, I do travel to the US extensively. Next year, I expect to spend between 3 and 6 months in the US. So do reach out. Those numbers are, I will pick up those numbers. They're on WhatsApp, so don't hesitate to WhatsApp me. Happy to chat at any time. And as I said, I come to the US regularly and available for in-person meetings as well. I don't have much time left for questions. I've dragged it on a bit. I do apologize, but I'll quickly try and answer some of these questions. Look, in terms of the timeline, look, these things take 3 to 5 years from start. We're about 18 months in. We think, by virtue of what the panel's done, they've chopped a year off. So if the hearing is at the end of next year, I would hope that we would get to an award stage within around 12 months after the end of the hearing at the end of next year. But that is speculative. At this stage, it's the panel's in control of that timetable. But I do point you back to the journey investment. Okay, you don't have to wait until any final outcome. You can ride that journey, and that is a compelling opportunity. What's the break point? The break point is probably around, after paying LCM, it's probably around 125, 150 off the top of my head. In terms of our burn rate is very small. Our burn rate is probably about $1 million US a year. We did a big cap raise at the beginning of the year, and that should carry us for at least 2+ years. So at least almost to award date potentially. In terms of can India be forced to pay? Yes, we can seize Indian assets anywhere from a treaty country. And we wouldn't have started this process without doing a due diligence of all those assets that are out there. They're out there and they can be collected. And as I've highlighted, when you start collecting and it's reported in the media, countries tend to pay. They don't enjoy the political backlash when assets are seized. The 1.58 billion was derived by one of the industry leading experts, it's based on an NPV of the gold stream going forward from a mine development plan that the expert developed, and that's why it's leveraged to the gold prices. Essentially, it's your top line revenue is ounces times gold price. Look, I think we've only got 20 seconds left, so I will call it a day. Obviously, I am contactable. Thank you for your time. If you have any questions, reach out. Thank you for you.